Good morning friends and welcome to the pre-market view. We have seen weakness across the global markets. Yesterday US markets were down anywhere from 0.5 to 0.8% and even European markets were down anywhere from almost about 1% to 2% as the limelight is hawked by the uncertainty in the Eurozone, mainly because of this Cyprus deadlock, and EU has given some kind of a timeline for the resolution of the bailout plan that it has given to Cyprus authorities, and by Monday, if they do not come up with any concrete plan, then there is a serious possibility that Cyprus could be out of the Eurozone, and that could lead to some kind of a contagion or uncertainty spreading across Eurozone as well as in the other markets, and that is where the key focus lies at this point of time. Though some of the data points that came out from US were quite positive, housing starts data were positive, even the unemployment continues to look better over the past many months, but that did not have any material impact on the markets. And when we look at the Asian markets, most of the markets are showing weakness. Japan is down almost about 1.5%, the rest of the markets are down almost about 0.4%. In terms of flows, FIs were net buyers in the cash market to the tune of 360 crore. The domestic institutions were sellers to the tune of about 30 crore, which is not much, and in the index futures the FIs were net sellers to the tune of about 130 crore. Back home our markets continued to slide down, and any attempt of a pullback is actually meeting with a lot of resistance, and we saw that yesterday also. We had in the morning session an attempt to touch almost about 5750, but then immediately there was a crash landing to below about 5700, about 5650, 5670 odd levels. And this time around the key point is that it's not only the mid caps which are grinding down, but the broad spectrum of the market, including the AD/AG pack. Most of the stocks are quoting at 52-week low. Even some of the private sector banks like HDFC, Tata Motors and few other large cap names are also showing a lot of weakness, which is definitely not a good sign. The only way possibly some investors could look at making money is by buying some puts of at the money stock, because we've seen that the expiry is approaching over the next about 4 to 5 days time, and looking at the kind of volatility which is there, at the money put could actually make a lot of sense at this point of time. And on that note, let me invite Sadhana to take us through important F&O cues, ideas and strategies that we can have in the F&O markets.
Good morning friends, let's have a view on derivatives. As we have seen, markets have been falling continuously from last Friday and continuously trading in a negative terrain. Yesterday also Nifty futures opened on a higher side, but due to heavy selling pressure, Nifty futures closed at 5664 with a loss of 0.90%, and around 82,000 shares were reduced in open interest, and Nifty futures premium also decreased from 21 points to 6 odd levels, indicating long closure has been taken place in yesterday's trade. And PCR is also quoting below the mark of 1. Usually we have seen if PCR is below the mark of 1, it is a bearish sign for the market. On the options front, we have seen good number of accumulation in open interest in call options strike of 5,600 followed by 5,700 and 5,800. So indicating overall our bias for the market is negative. As we have closed below our important level of 5690, we have revised our bias to the negative. As we are trading below our weekly VWAP of 5,900, so our lower range for the market is 5520, which is very crucial and important level, and higher range would be 5900. From intraday perspective, one can go long on IGL with a stop loss of 266.70, and one can go short on Bhushan Steel with a stop loss of 458.70. Thank you.
Here are the important news and events that we are tracking today. First of all, EGOM has fixed the OFS price for sale at 63 rupees per share. The closing price was also around about 64 odd levels, and this is a 52-week low price for the sale. But the point is that at this point of time, given the timing of March ending, where the system is facing a liquidity crunch and the overall outlook towards metal space is weak, so the response could be okay, but we have not seen any great money being made out of these kind of stocks. Yes, but from a long-term investor's perspective, the price or the valuations at which some of these stocks are available are looking quite interesting. And in this Cobra post expose, whatever allegations have been made against the private sector banks about money laundering, there is a statement from the RBI Deputy Governor that there has not been any actual transaction which has taken place. There have been few cases of KYC violations, but it's not a systemic problem. So there is some kind of a relief for this private sector bank. So one could expect some pullback in banks like HDFC Bank, ICICI Bank and Axis Bank on the back of that development. For auto sector, some kind of a relief is expected, as the finance minister has indicated that this 3% hike in the excise duty, there could be some kind of a relief. There might not be a rollback of the excise duty, but some section of the buyers could get some relief from the government on that, and which is definitely a bit of a relief for companies like Mahindra and Maruti also. L&T Construction has bagged an order of 1385 crore for construction of residential towers in North India. So one can go long on L&T with a stop loss of 1368 and a target of about 1438 to about 1466. Wipro, some positive news, as Karnataka High Court has approved the demerger scheme through which the firm plans to hive off its non-IT businesses. So one can go long on Wipro with a stop loss of 425 and a target of about 447 to about 456. Ingersoll ran some positive news, as the company's manufacturing facility at Mahindra World City near Chennai has gone on stream, and this facility is going to produce the equipments including bus and truck air conditioners and commercial heating and ventilation and air conditioning products. So this is a positive news for Ingersoll Rand. One can go long there with a stop loss of 404 and a target of about 424 to about 432. Keep in mind that Ingersoll Rand is not a very liquid stock, so one really can't take a big punt on it, but some kind of a pullback is expected on the back of this development. NHPC, some negative news, as the Parliament has informed that as many as 19 cases of corruption and alleged violations have been reported against some of these projects of NHPC. So one can go short on NHPC with a stop loss of 21.4 and a target of about 20 to about 19.5. That's it from all of us, friends. Have a great weekend and see you on Monday morning.